I'm going to jump right into it here. So, big week, treasury collapse, Bitcoin underperformance, macro trends, gold, the whole nine yards. I think there's a lot to look at, and it really comes down to positioning and position sizing. I think a lot of people like to sound smart. They've got all kinds of data and statistics, and while the data is important, if you believe in the Bitcoin adoption trend, and that's kind of how I'm playing my general investment thesis, then you want to just be positioning for maximum risk return in any sort of market condition. And I think people are really, really terrified of a monster drop in Bitcoin price. But I think some of their fears are unwarranted for a couple reasons. And I'll point those out in both the macroeconomic data, the general trend data, hash rate data, the user data. There's just a lot of different metrics that kind of we can use objectively to figure out, okay, should we be applying leverage? Should we be applying short positions? Should we be long volatility, short volatility? And how am I and you watching going to outperform Bitcoin or make as much money as possible in the current market environment? That being said, the hedge fund's going well up and running. Obviously, we're losing a bit. The nice thing about call spreads, the theta decay isn't too bad towards the beginning duration of the hold. You're going to experience large volatility. That's why I size kind of the call spreads and the leverage I've designed on top of IBIT and Bitcoin very small. But if you're going to take on leverage, if you're going to take on any sort of form of risk related to Bitcoin, you're going to need or demand that upside return, that high expected value payoff. And that's something I don't think the Bitcoin treasury companies right now are offering. So that's why I am not allocated to any except I think it's a 4% allocation to Metaplanet, which for the time being, I'm totally fine with. Entered at a very low MNAV, about 1.2. I prefer to enter below 1, but I'm kind of scaling in there. They do a great job. There's no preferred senior equity sitting senior in the capital structure. That's a big no for me. I did a little post on that, but more of that later. Let's go. I will show you the charts and we'll get into it. MSCR IBIT, this is the famed chart that's hugely important. Obviously, it began to roll over. I think so. The reason I hopped out was because of the senior preferred equity. I understood the what could be perceived as a massive risk to the common via a uncallable senior moving liquidation preferred. There have been some comments on my videos recently or my posts saying liquidation preference doesn't matter. It only matters in the case of liquidation. I think this is a completely nonsensical argument. It's like beyond nonsensical, considering that the entire value of a Bitcoin treasury is derived by the amount of Bitcoin per share, or it's argued to be the Bitcoin per share of the common equity, and the premium is a result of the increased expectation of Bitcoin per share. That is effectively the amount of equity you have in the or amount of underlying asset you are owed in the case of liquidation after the creditors have been paid out. So this is completely nonsensical. Bitcoin per share, you could say, only matters in a liquidation event. So it's all nonsense. These things are priced based on their assets and the future expectation of growth of the assets. And there's no real cash flow to speak of. So you have to think of them differently than a cash flow generating business. Okay, next. MSCR IBIT, this is a complete bloodbath, really a bloodbath. It goes to show you, I think ATM was a mistake. I think it was a mistake. The aggressive ATM. I think maintaining, if I had a Bitcoin treasury, I would be really focused on maintaining durable, long lasting, cheap, high leverage capital structures. That's what I would do. It's not my job to prop up the entire Bitcoin market. Bitcoin's the hardest money known to man, and it will continue to be adopted. This is the BTC Gold chart. BTC Gold breaking down. This is good. As long as gold keeps ripping, I think there's a floor in price. I don't think we ever see a Bitcoin gold. Now, gold could break down in price as well, but I don't think we ever see a Bitcoin gold down back to these 2022 levels. I think it'll be, a floor could be somewhere in here, kind of worst case. And just over time, this will continue to go up and to the right. So that's all gravy. Bitcoin Qs, I think I was looking for some sort of correlation. I'll do some more dynamic testing on kind of equities performing prior to a Bitcoin or Bitcoin leading equities on a downturn. Equities look fine. I think the market's super frothy, but there's other macro investors that are better than me on the general landscape of AI capex and how sustainable that is for the next year to come. I'm carefully watching the equities market, but I'm not basing my trading decisions necessarily off it. this is played into that same sort of theme. Institutional investors sold 1.4 billion, reversing to net selling for the first time in 3 months. Brings down 4-week average buying down to 1.6 billion, according to Bank of America data. Bank of America data. Hedge funds, net sellers, and you can see retail selling as well. We'll see what the next week brings. I think we're in a bull market, and as they say, we're in a bull market. S&P 500. This is super interesting. This is going to get into volatility a little bit, and that's kind of the way I look at these things because volatility is your edge in the market. Because volatility, we can say, is mean reverting. Sure, I don't think it necessarily is. Volatility just changes over time. And what's really interesting about Bitcoin and the current environment of Bitcoin and its volatility regime, which I'll talk about in a second, is that the market cap has not grown substantially, but the volatility has come down significantly. So if you do believe in kind of a mean reverting volatility, we can't expect a volatility expansion, whether that be to the upside or the downside. I'm kind of thinking it's skewed to the upside potentially. S&P 500, 37 trading days without a decline at least 1%, the longest streak in a year. By comparison, the longest stretch over the last 5 years was 53 trading days. The index has also seen 108 sessions without a drop of at least minus 2%, the longest streak since July 2024, according to Bloomberg. This also marks the second longest stretch since before 2020 pandemic crash. So we can see this just really, really dampened volatility. We can look at the VIX index and see across the broader equities market, it's been up and to the right with extremely low volatility. And that's something that's different between Bitcoin and traditional equities. Traditional equities, they take the stairs up and the elevator down, so volatility expands to the downside. And sorry, I don't know why this thing keeps popping up. Traditional equities take the stairs up and the elevator down, and so volatility tends to expand when equities collapse during crashes, whereas with Bitcoin, volatility both expands during crashes and expands during melt ups or run ups. So for all those reasons, I think Bitcoin's a really profitable way to play long exposure using calls. It's more difficult equities markets. I like the Nancy Pelosi style in the money long calls over a long period of time to get that asymmetric exposure or that lever exposure to equities if that's something you're interested in. Now, we can talk about the kind of long end of the curve creeping up because of rising inflation and essentially the Fed not being able to control the long end of the yield curve. That's great. That's all just regurgitation. I mean, I could ramble on about that forever, but this is not new news. The fiscal situation in the U.S. is quite unfixable, and although the probability of cuts coming over the next 3 months actually decreased a little bit today, we're still likely going to see 2 rounds of 25 basis point cuts through the end of the year, and liquidity will keep rising. I think cracks in the equities market could be problematic for Bitcoin, but as long as we're getting kind of strong cutting behavior, and even with inflation ticking up, I think it's a Bitcoin environment. So I'm not, right now, I'm kind of thinking, they say like no bear, no bear. I'm a power law guy. We'll look at the power law and we can make our assumptions moving forward. Market consensus forecast is a little outdated, but this is kind of what you're looking at for yield for the Fed funds rate. And this is quite bullish for preferred equities across the board. The market clearly is pricing in more risk. The credit spreads are extremely high on Strife. Strife, I think, is mispriced. But I'm not going to trade things that I don't think people will pile into, especially as they don't have ratings. I think if Strife had a rating or was going to get a rating or you knew they were going to get a rating, you'd probably buy it. Right now, I'm unsure of really anything in the Bitcoin treasury space other than I like Bitcoin. Hash rate up and to the right, overlaid with price. Hash rate is kind of the underpinning. Hash rate, total addresses, and price, they grow with the square of each other, and that's been the trend lines do. That's been a really like kind of fundamental, eerie correlation that has led me to believe the power law is in fact an accurate model because the hash rate is the physical underpinning of the actual Bitcoin network, and the number of addresses is a extrapolation of the adoption over time, and price is a reflection of that, the network effects. And hash rate growing at the time to the power 12, at price growing at time to the power 6, that's a pretty uncanny relationship. I'd recommend people look into that a bit more, but this is where things are going. As long as hash rate stays positive, I'm remaining positive. And there's been no significant dip in hash rate. Hash rate generally is up and to the right, but over long periods of time, things are still good and network activity is strong. M2 money stock, money supply up and to the right. Like this, people want to correlate and make crazy assumptions. It just means Bitcoin's going up over a long period of time. Zoning in, honing in on the shorter term market behavior, I think is more of a function of volatility, market sentiment, positioning across the options market, positioning in the treasury companies, positioning, you know, by hedge funds and institutions. That's how I think you can kind of gauge the market dynamics in a way that, adoption's up to the right, fine. Like that's not where you make the money. You make the big money by buying dips and selling rips. Now, real GDP obviously higher than expected, and that was so, broader economy does look good. This is largely contributed to by AI capex spend, which I will spend some more time on and get more information out. Inflation slightly lower than expected. Jobs. Weakness in the labor market still a threat, but nothing too crazy. Higher than expected GDP. Uh, Lower the rate cut probability through the end of the year from over 90% to the high 80s for stronger than expected GDP. Stronger than expected GDP lowered the likelihood of rate cuts in October from over 90% to 80%. I think that's some of the market turbulation today, but it doesn't really matter. It's still super high likelihood, and I think we'll probably see two more cuts by the end of the year. Now we can look at the 30-year Treasury bill, and looks fine. It's trading in a range, and it's ticked up over the past few days on this strong GDP news and with heightened inflation expectations. But I don't think there's any real alpha here. You can see the future expectation of rates in the next 3 months with the 3-month Treasury, and you get the 10-year here. I wish I had more alpha to glean from the bond market. It looks tight. It looks stable for the time being. I don't think there's too much to worry about there. Now, 25 cuts down to 38 bips after initial claims print. I didn't know what that meant, and you can see it's the market's implied change in the federal funds rate specifically for 2025. So you can see that the implied change in rate decreased, meaning there's a lower expectation of the amount of cuts between now and the end of the year. Not a big deal, but cuts are still coming. It's just on the back of strong GDP. Now, back to this power law chart. I mean, this is if you think hash rate is a indicator of price, then you believe in power law because it's the closest relationship between hash rate and price. It's price growing at the square root of hash rate, which is a pretty, I think very powerful correlation. But as we sit at the end of September, power aggression of 115 would be our kind of fair value target. Excuse me. And we are now at 109, 110, 108. I can't, 108, something like that. So we're below the power law trend, which I think is a buy zone. I mean, I wouldn't be holding cash here. I don't think you can expect a huge drawdown or bear. I think you have to be prepared for one, and I'm in fact prepared for one, but I still have about 12% asymmetric upside leverage in the portfolio. I would be willing to ride that to zero, unfortunately, but that's the directional risk you have to take. And that's something I've been thinking about a lot too recently. Everyone wants delta neutral strategies. With Bitcoin, you want to be exposed to delta. You want to be exposed to delta over long periods of time. And you want to do it at the right times. And I think right now is a great time to have some of that asymmetric long volatility exposure. Not that the calls are as long volatility as it could be, but in the portfolio. So I like where we're at. I don't think you want to push your chips all in. I don't think you want to be really using any margin. I'm not using any margin across the board. You want to reserve the margin for complete market capitulation and breakdown. Power law floor is what I like to use there. And then you can see the general trend price. This is how I frame Bitcoin. This is your fair value expected annualized return. Obviously, that's going to be with monster volatility. But through 2026, you can expect a 39% annualized return. I love looking at it this way, time to double. this is kind of my base case for Bitcoin moving forward, and I think it's a great way to look out into the future. Now, I wanted to talk a bit about search trends and volatility to finish up this video, and then we can wrap it up for the night. So, search trends super low. These aren't as indicative as they used to be, considering. Yeah, they're not as indicative as they used to be, considering that a lot of the institutional flows will continue to drive Bitcoin. Retail mania could still be a huge part of the run. We'll see what happens through the end of the year and the beginning of Q2 or Q1 2026. Now, MSTR historic volatility, you can see the implied vol relative to the historic vol, and the historic vol is flat around 50%, with the implied vol spiking up today as the price was collapsing, the MNAV compressing. I just don't think there's a big bid between here and 1 MNAV for MSTR, unfortunately. Maybe there is because of the perceived leverage in the capital structure, but I don't think the prefs are the same leverage as a convert, because they're not being treated as a gap accounting liability. So I think the prefs kind of mark a one-time gain in the future expectation of Bitcoin yield. So, and there's no uncertainty in the debt, in the terms, in the term principal coming due. So I'm not super bullish on the idea that prefs create actual leverage in the enhanced volatility and leverage in the capital stack. I think the prefs are kind of a volatility reducing instrument, and I'd own the prefs. I love the prefs. I don't know. I just don't love the common here. Would you sell puts here and maybe get assigned at a lower price? That could be a play. I'm not selling puts on MSTR. When you look at the IBIT historic vol, so this is the past 6 months, and volatility is like massively, massively important when it comes to selecting entries for options positions, or when it comes to selling volatility, right? I'm being super careful selling my upside, and it's over the past few weeks, it's been kind of, it would have been prudent to sell more aggressive calls, but in hindsight, every week you could have sold a call and made money as a missed money opportunity. But it's that few days of the year when you get those big BTC moves that you don't want to be short to the upside. And I think the short vol trade is really in full effect, and I don't want to ride that consensus trade. Right now, a lot of people are making a lot of money selling the vol on Bitcoin, and it's really dampening the volatility. And this last chart is what I'll show you on that. So this is the white line, the implied vol, and the orange line, the historic vol. And what's so interesting is look at Bitcoin's price. You can look at its market cap elsewhere. The market cap has not significantly increased since April or since the beginning of last year. The market cap is very, very similar, especially on the scale of global assets, right? Global macro assets. This is not a structural decline in volatility based on the increase in market cap, which is true. Over time, the increase in market cap will just fundamentally reduce the amount of volatility because the amount of capital needed to move the price up or down a certain percentage over time increases, right? Because of the larger market cap base effect math. I hate that word, but that's what people use. So why is the volatility increasing? You got seasonality, you've got the sell pressure, the arb pressure of kind of the desks that are short vol, short calls, short upside on IBIT and BTC. So I do think this breaks. I think this breaks one way or the other, either in a breakdown in price or a melt up in price. And I'm hoping it's a melt up, and I think it will be very abrupt. People are thinking, oh, we just grind higher, we just grind higher. I don't think it's going to grind higher. It's going to either break down, we'll get down to 80K, and you can kind of push your chips back on the table, 80, 75K. I think if we got back to those levels, I think you'd be fucking shoving all in. But here, I think you're just kind of, you're hoping we don't chop. If we drop down, you have to lick your wounds, and then you could go back in with size, find really, really good kind of undervalued Bitcoin treasury-esque companies. But if we go up, I think it'll be aggressive. So that's why I am not a subscriber to this idea that Bitcoin's going to bump around at 30 vol. Maybe it will, but for the time being, I don't see that being the case. That's all I have for tonight. Thanks for watching, and that's all I have for tonight. Thanks for watching. Hopefully these little macro videos are helpful. More research coming out on some of the companies that I'm actually focused on and trying to make asymmetric bets. across the kind of high performance compute and Bitcoin treasury landscape than how I'm constructing the call spreads too, because I think ultimately people are looking for all kinds of forms of fancy leverage when really they just want to be long Bitcoin. And if you want to be long Bitcoin, you want to time your entries and exits and create the most asymmetric payoff because you don't know what's going to happen. But if you're right, you want to make a lot of money. And so that's why, again, I like the IBIT call spreads. And I think constructing really far out call spreads is another good play. So, Strawberry Capital is where I'm doing the trading. Our performance dashboard is still not quite hooked up to our API, but all the investors are getting fully audited performance and NAV reporting every quarter and on a monthly basis if they want. So, thanks for watching. Talk soon.